Everest Industries. The stock is down quite a bit. Manish Sanghi, MD of Everest Industries, now joins us on the phone line. Mr. Sanghi, hi, good morning. I'm just going through your numbers, and what stands out is that your income has gone up 16%, and still your EBITDA has halved, and you've turned into losses from profit. If you could tell us what happened in the quarter.
So we have two segments, and we saw very good traction and growth in our steel building segment, and we lost in the building segment. And in the building segment, we essentially sell into rural India, and we had a bad situation over there. We suffered on account of volume and pricing ability because of the not so good monsoon and the drought situation. We also suffered to some extent on account of the lower prices of steel because we compete against the steel sheets. And the third reason was that the exchange rate, the rupee weakened against the dollar, and we depend a lot on imported raw material. That resulted in pulling down our results rather badly on the building product side. We believe that we have renegotiated some of our contracts for import, which will help pull us up, and the steel building segment should continue to do well.
Okay. What is your outlook on the building product segment in this quarter then? Even though you've renegotiated some import contracts, maybe from a demand side, what are you seeing?
I think the demand would remain at the same level as last year. I don't see it growing much more than last year. But hopefully the pricing would be better and raw material cost would be lower.
Okay. Your steel segment has done well. Are you focusing more energy there going forward, considering that it's been a bit positive as opposed to a loss on a year-on-year basis?
We have set up a new facility in Gujarat, and that's the impact which is showing in the results, both in terms of top line and bottom line. We continue to get good orders, and we believe that this order inflow will increase with time, simply because there is more investment coming into India. And we, in many ways, are like a bellwether company, particularly in the steel building segment, on what's happening on the manufacturing side in the country. We are seeing strong traction. We are seeing people wanting to build now. And that's where we come into the picture. We provide good, quick, efficient solutions to people.
So going forward, do we see more and more numbers coming from the steel division?
The split would remain kind of the same. I do not think that the split will really change dramatically, except that there is some bit of ramping up still to be done at our new plant in Gujarat. So it would increase. I expect that steel buildings will go up to something like 500 crores for the year. But I expect building products to pick up a lot more in the second half of the year.
Okay, a quick question with regards to the second half for the foreseeable future that you have. Would you still be making losses on the bottom line, maybe in the third quarter? And if you can give us guidance on the fourth quarter as well. And similarly, where would your margins be?
I don't think we will be making losses. Okay. Traditionally, Q2, which is the post-monsoon time, is the worst quarter for us. Okay. And that is unlikely to be repeated going forward.
All right, Mr. Sanghi, thanks a lot for taking your time out and talking to us. That's Everest not doing good in today's trade. Let's get back to Ranisha then. Ranisha, okay.